In financial markets, items, bonds, stocks, and records are considered as the most well-known instruments to trade. With the rise of cryptocurrencies over the past few years, more and more people, particularly the younger generation, are beginning to swap out these instruments for Bitcoin. In this video, we compare Bitcoin to the S&P 500, which is one of the major US stock indices. Bitcoin versus S&P 500. While claiming the S&P 500 is a bet on the future of the American stock exchanges and economy, possessing Bitcoin is a bet on the future of cryptocurrency as a whole. Individuals actually appear to fail to remember that for your alts to go up, Bitcoin must go up also. In that sense, Bitcoin's performance can be seen as an overall index of crypto. Another major difference, in my opinion, lies in the nature of the asset. As discussed, the S&P 500 is a collection of more than 500 established businesses that have endured. These businesses make money and add value to the real world. The natural worth of the S&P is accordingly effectively quantifiable utilizing different income, or benefit-based models. The value of Bitcoin is significantly more speculative. Despite the fact that the S&P and Bitcoin are both valued by the market through demand and supply, Bitcoin does not have any revenue streams, dividend payments, or annual reports to help determine its potential value. This lack of data is part of the reason why I personally consider Bitcoin to be much closer to a commodity than a stock index. Which should you buy? Although it may not be fruitful, the discussion of the differences and similarities between Bitcoin, the S&P 500, gold, and other financial instruments is very interesting. We can endlessly discuss the superiority of one over the other, or just bicker about their differences. Personally, I believe that each asset class serves a unique purpose, and portfolio diversification can be extremely profitable. If you are currently making investments in cryptocurrency markets with money, or stock markets for that matter, why not investigate the opposite side? You might discover a competitive advantage you didn't know you had, or you might discover that the untapped market is a lot more interesting than you thought. The idea is to give new experiences a shot before making judgments based on presumptions. Experimenting with the stock market was very insightful for me, and it helped me learn more about what makes markets move, particularly taking into account the connection between business sectors. This understanding is exceptionally valuable.